Ohio's fuel cell industry faces a number of challenges as it grows in the future. Technical cost and reliability, just to name a few. We recently sat down with Michael Leiblein, Associate Professor of Strategic Management at Fisher College of Business, to discuss how uncertainties could affect competition, profitability, and Ohio investment in fuel cells. Professor Leiblein, thanks for joining us. We do appreciate it. Talking about this industry, it is so young, it is at an early stage of uncertainty. How do businesses think about competition at this point?
Well, I mean, typically in a lot of early stage industries, we see these large numbers of companies, rivals competing with lots of different solutions. And typically there's this shakeout period as these solutions to these problems are ultimately solved. In those kinds of settings, there's really three big challenges. One, the uncertainty regarding consumer preferences, how different technologies are going to shake out here, biofuels, petroleum, fuel cells, which of these is eventually going to win out as superior, and thinking about what markets are going to really value solutions from each of those areas. And so that creates all sorts of complications for investment. The second issue is capturing value from innovation and knowledge and all sorts of problems associated with the sale and trading of knowledge-based assets as opposed to, let's say, physical assets. So I think these firms are thinking about how are they going to capture some of the value from these innovative solutions they have. And then the third major area is just delivering that value. What does it mean in a dynamic, fluid environment for a firm to be organized to meet today's needs as well as adjust to all the changes in their own technology as well as some of the competing technologies?
Because this industry is young, I guess businesses are out on the line a little bit that they are worried about making profits. What about profitability? Can money be made?
Yeah, I mean, I think one thing that's really interesting in these types of settings is there tends to be quite a difference between sort of the entrepreneurial entrants with new technologies, let's say fuel cells, and how they compete with established firms, let's say as traditional fossil fuel providers. And so what I think the evidence suggests to us are there's really three questions that you have to think about, which suggests which of those classes of firms is most likely to succeed. The first is really what are the incentives of the incumbent, let's say, fossil fuel provider here to invest. And if there's a real fear that the new technology here, let's say a fuel cell, is going to supplant the mass market, how does that affect the incentives of those incumbents to invest? The more likely it's to supplant the mass market, the more likely they'll invest aggressively. So the second issue is the differences in the skill sets between the entrepreneurial firms here in fuel cells and maybe some of the established firms in old line petroleum. So the more different those skill bases are, for instance, you might think of an old line mechanical company, and then there's an electronic innovation. You need very different skill sets, very different employee groups, very different interactions between different groups. And the more drastic those changes are, the tougher it is for the incumbent or established firm to succeed.
Well, one thing that's always enticing is getting a return on that investment. How does Ohio guarantee a return on its investment?
Well,
there's no guarantees, right?
There's no guarantee, right? So I do think we know, on average, technology-intensive sectors have provided about 3% risk-adjusted superior returns over the last 20-25 years relative to more stable sectors. So I think there's a lot of promise in these types of settings. The payoffs are, the distribution of payoffs is highly skewed. So there's few winners who win big typically and others who do not. I think the best advice, whether it's for a company or for the state as a whole, is to think about the portfolio of investments they're going to make. You're trying to develop a portfolio of research projects that leverage some of the unique skills and abilities of the region or the firm. We're fortunate here. You think about clusters around the nations, the Silicon Valley, Route 128, UT Austin. We in Ohio have some of the very similar attributes of those sectors. Great research universities, great research institutions here like Ohio State and Battelle, a well-educated workforce. And if we can leverage those skill bases, I think, and develop an appropriate portfolio, we'll be well positioned to succeed in the future.
Professor Mike Leiblein, thanks for your time. We appreciate it.
Thank you.